back to the channel. My name is Mode. If you're new here, welcome. If you're not, welcome as well. In this video I will be talking about the quarterly report. So Garmin has recently posted, they've published a quarterly report, the third quarter report. Yeah. So it looks promising, so we'll get into it. I will tell you first on the financials, so the way the company has performed in the last quarter, and then we'll jump into what's made it perform in this way, and then from there we'll jump into what we expect in the future. So that's the kind of thing that we'll be looking at in this video, and a lot has happened if you ask me. So this video is going to go up on, I think, Saturday, Sunday, somewhere there, just after the report was posted. But yeah, a lot has happened. Garmin stock has moved up, I think, about 15%. From then, Americans have been voting as well through a voting system that nobody seems to understand. It's very complicated. Nobody seems to get it, including analysts themselves. No one understands what's going on. So, well, anyway, let's get into the video. Getting into the numbers. Everybody loves numbers. I love numbers. I don't know about you, but yeah, I love the numbers. So revenue has grown by 19% in the last quarter. So year on year, 19%. Gross profit has grown by 60%. EPS has grown by 37%. Operating margin has grown by 29%, about nearly 29%. Operating income increased by 21% to $390 million. So we're still looking good, revenue-wise, growth-wise. Everything is looking good. So that's a tick for Garmin. Now, obviously, this growth is attributable to a bunch of different things. For a start, Marine has done very well. It's grown its revenue from last quarter about 45%, which is a very good thing. And this growth is attributable to chart plotters. So chart plotters are kind of like a dashboard for a boat. So this is where it shows you what obstacles are around you, what obstacles are underneath the boat. These things have been selling very well for the company. Fitness segment rather, has been growing at 35%. So last quarter, so third quarter, it's grown by 37%. And this is actually, if you know about this, you know that everyone has been trying to lose weight during the lockdown. Whether it's happening or not, I have no idea about them. Everybody's trying to lose weight, but it seems everybody's going the other way around. So instead of losing weight, actually gaining weight because of lockdown. The sales growth has been driven by, obviously, majority of wearable technology, wearable products like the watches, the fitness trackers. Although I should be wearing a Garmin, I don't have one, not yet. The outdoor segment has grown by 30% in the last quarter. I'm loving this company really. I'm really loving this company. This is attributable to the adventure watches. So there are these watches that they kind of, they're very good for outdoorsy people. Outdoorsy people. They can charge using the sun, solar charging, and then they can last for a very long period of time. I think about 15 days or so, somewhere there, which in my opinion is much better than the Apple Watch. But yeah, don't quote me on that, but I'd like to know how long an Apple Watch lasts. I'm sure it is not as long as a Garmin watch. Automotive segment will continue to lose money, and obviously we expect this. We mentioned this in the last video. It's been struggling. It's kind of like the last punch out that everybody doesn't like, and just getting beaten around. And yeah, the automotive segment has really been struggling, but reassuringly, the business has started developing, maybe making units for the BMW and Daimler. So that's a good sign. We'll see how that continues performing. The aviation segment has declined 19%. This is something I didn't expect personally. I thought it would actually do well, but it's a short-term problem, which I am very sure the company will fix. But the good thing with this is that the Autoland system is now in 3 types of aircraft. So the first one is the Piper M600, and then the TBM 940. And I don't know about you guys, but I think this plane's actually cool. I'll pull up in this one, in this kind of plane, and I mean, it's a plane. It's like £2 million, $2 million or £2 million, somewhere there, to get yourself one of these. And I don't know about you, but I mean, if I had the money, sure, why not? It's a cool plane. If you have a small airstrip as well where you live, yeah, pull up in this little thing, like, oh yeah, what's up, beep beep. Now, my comments on the sales. So the sales have been doing very well. Revenue has been growing, net income, EPS, everything, operating income as well, that's doing very well. But I found this article on Seeking Alpha. One thing that actually drew my attention more to the article was the massive discounts they've been giving on their watches. No, it's not just like 10% discount on the watch, it's double digits. It's like big discounts on their watches. Now, someone that's new to the business, or someone that is new to maybe the industry of, retail industry, might be thinking, oh, the company's giving these huge discounts because they're not selling these things very well, so they're struggling to sell these things, so let's just get rid of them, maybe pricing them like half price, and just chuck them out of the door as quickly as we can. But this is a good thing. It would be concerning if sales weren't growing as much, and then you see such a discount. You'd be concerned. You say to yourself, these things nobody wants to buy these things, so there's no reason why sales are expected to grow as people actually claiming that they would grow. But Garmin has been growing sales exceptionally well, and then giving discounts as well, big discounts on its watches. The reason for this is they're trying to be the bigger player in the market. So Apple is obviously the big one, as we discussed in the previous video. I will link it in that place. Apple is a big player, so they're trying to beat Apple by pricing their goods at half the price, maybe as low as they can. This is a monopoly mentality, and to be honest with you, I actually like it. I enjoy this. I enjoy seeing this. You might be saying, monopoly, this and that, but I want to invest in a company that wants to win. I don't want to invest in a company that's slow to adapt. A company that doesn't adapt. I don't like that. So this is a good sign. We'll continue holding on to Garmin. I think it was Bank of America. They came out and said, we've raised the price target for Garmin because we expect the company to perform better. Now, if you ask me, I will continue trying to be ahead of Wall Street. We'll try and beat them. We'll try and see whether we can beat the index at best. That's going to be difficult, but I mean, we've seen the Buffett and everyone trying to dare each other to beat the market, but we'll try and do our best. We'll try and pick winning stocks. And then actually, speaking of winning stocks, the next video I will post, let me know if you want to see a video about maybe consumer cyclicals or maybe non-cyclicals. If you enjoyed the video, make sure to leave a like and subscribe. I will see you in the next one.